How much of your crypto capital is currently risk off? How much do you have in stablecoins? How much do you have in altcoins, Bitcoin and Ethereum? There's a certain ratio, right? Whenever we are very certain about something, we might be fully deployed. Whenever we are a bit more cautious, we move it back to stablecoins. Now, this is true for every individual investor. It's also true for the entire market. It tends to go risk on and risk off. And interestingly enough, there is a certain trading range that helps us time the market. Have a look at this chart over here. This is the stablecoin dominance, or what's the average ratio of risk on to risk off assets in a portfolio. Whenever the stablecoin dominance is high, that means a lot of dry powder is on the side. The market tends to be maximum fearful when the stablecoin dominance is close to 16%. We saw that peak in Q2 and Q3 of 2022, and prior to that peak, we just saw stablecoin adoption. So the stablecoin dominance simply tended to increase. Now, after that peak, we saw how the stablecoins got deployed. They got swapped into risk-on assets, thus increasing crypto prices. And for the last 2 years, we have been in a somewhat stable range. Now have a look at this chart at the bottom. That's the crypto market cap excluding stablecoins. So we're looking at everything that's not USDT, USDC, BUSD, DAI, etc. We're just looking at whatever fluctuates in price. And have a look at this peak over here. That's also when crypto prices tend to be low, when the market cap of everything risk on was very low. As stablecoins got deployed and the dominance went from 16% down to 5%, that's when crypto market caps increased on average by 300%. So a 4x in crypto prices after a somewhat modest deployment of stablecoins. Now that's interesting, right? It seems like it doesn't take that much money to move the markets up and down. So $1 invested in an asset does move the market cap by more than $1. There is an inherent leverage effect. An easy analogy is the property market, right? Let's say you've got 100 houses. They're all 1 million worth. Nobody buys and sells the house. They're all exactly the same kind of house. Now one person decides to sell their house for 2 million instead of 1 million. Suddenly the market cap of those 100 houses, because they are comparable, that market cap moves from 100 million to 200 million. So you only have 2 million of capital that get moved, but you're impacting the market cap of the asset class by 200 million. And so instead of looking at 100 houses, we are looking at 21 million Bitcoin. This is pretty much how it works. It doesn't take much capital to move the markets quite a bit. Now there is this inverse correlation. And if we stay in a certain trading range, then we can take different times for buying and selling opportunities. When the market is very much risk on, when all the stablecoins are deployed, when there is no dry powder on the side, that's when we should be selling. We should be buying though whenever there is a lot of dry powder on the side and the stablecoin dominance is high. Of course, it's rather an art than a science to figure out at what point the stablecoin dominance turns around. It did look like that we were just trading in a sideways trading range before the recent breakout. Now the story could rather be that the stablecoin dominance tends to slowly increase over time. If there's more confidence in the market, that would mean crypto prices go up again. But if the market continues to be spooked, there is the chance that we hit the 16% dominance mark again. That of course wouldn't be too great. If we do go up to 16% though, this might be a very good buying opportunity. Historically, this was the end of a bear market. That's when Bitcoin was between 20 and 16K. Or the entire market cap of all the volatile crypto assets reached 600 billion only. Now, the stablecoin dominance is one thing. The other dominance charts, though, are also very useful. The Bitcoin dominance, that's the most popular of the metrics, but the Ethereum dominance is also useful, as well as the others dominance. Now, the others dominance is the dominance of all the altcoins that are not in the top 10. But let's start off with Bitcoin dominance. Bitcoin dominance shows us how important Bitcoin is within the crypto ecosystem. When Bitcoin dominance goes up, that means Bitcoin is outperforming the rest of crypto. Again, a metric that the market is turning rather risk off. That a lot of capital is just searching crypto allocation, but not necessarily outperformance in Ethereum or the smaller altcoins. We are in an upwards trend of Bitcoin dominance for the last 3 years. since September of 2022. And we are, by the way, relatively close to the lower end of the trading range. So it does look like we are going to see another run of Bitcoin in the not so distant future. Historically, Bitcoin dominance only really turned around when it hit close to 73%. If you're enjoying this video so far and you're getting some value out of it, then feel free to give this a like. It will help the channel grow. It will help spread the word. Thank you very much. Here's Ethereum dominance. It also tends to trade in a range between 7% and 21%. And interestingly enough, it has an inverse correlation with the Bitcoin dominance. So when Ethereum dominance is going up, Bitcoin dominance tends to go down and vice versa. In other words, people shift from Bitcoin to Ethereum and from Ethereum to Bitcoin quite regularly. Now this arrow over here, that was the move from proof of work to proof of stake. Since that transition, Ethereum didn't do that well. Now, why do I think that Ethereum dominance is likely going to decline from here? That's because of the following chart. So now we are looking at the altcoin dominance, or others.d. So how important are the cryptocurrencies that are not in the top 10? And there are a few highlights here. And those highlights show the correlation to Ethereum dominance. When the others dominance is going down, Ethereum dominance tends to go down as well. When Ethereum dominance is going up, the others dominance is going up as well. They tend to peak at the same time. They tend to bottom at the same time. But there was one decoupling, and that's the red line. So there is an outlier. Ethereum dominance went up while the altcoins did not appreciate. What happened over here? It's of course Tom Lee buying Ethereum. But why did we see all of that correlation before? It's because of coupling of the assets. Many altcoins are traded directly versus Ethereum in liquidity pools paired with wrapped Ethereum. That's on the Ethereum chain. It's also true on all the layer 2s, so say on Base, on Polygon, on Arbitrum, etc. The altcoins don't really get traded in US dollars, they get traded in wrapped Ethereum. So when Ethereum goes up by 10%, then many altcoins go up by 10% as well. The decoupling here happened because BitMine or Tom Lee only bought Ethereum and no other crypto assets. So the other crypto assets didn't do that well. Ethereum did do quite well. Until, of course, Tom Lee stopped buying. So now the treasury companies slowed down their purchases of Ethereum. So people are taking profit again as they have started with the move from proof of work to proof of stake. That's why I think this trend is likely going to continue. Ethereum dominance is likely going to go down. Thus, Bitcoin dominance is likely going to bounce. Again, because of the inverse correlation. When Bitcoin is gaining, Ethereum is losing. When Bitcoin is losing, Ethereum is gaining. Now, those are all just movements relative to one another, right? It says nothing about US dollar valuations. I do have a concern regarding US dollar valuation. So if we really hit the 16% stablecoin dominance, and if we actually crash in crypto prices, then maybe it doesn't really matter that much what is outperforming. But it's all a congruent story, as in if people do get more risk off, if this is actually the scenario, then Bitcoin should do comparatively better versus Ethereum, because Ethereum is more risk on compared to Bitcoin. The problem really is that the long-term holders continue to sell. This is the supply chain of long-term holders in Bitcoin. They tended to, in the past, just take profit whenever we hit new all-time highs. But now they're even selling as the price is going down. This is a novelty. It seems like many of the long-term holders do expect that the 4-year cycle will stay intact, that 2026 will not be bullish. And so this becomes a self-fulfilling prophecy, right? If enough people think that we are going down in 2026, then people sell. And that's what we see here. It's really the long-term holders that are moving prices. It's not the ETFs, it's not Wall Street. The ETFs only hold roughly 5% of the Bitcoin supply. Just have a look at the long-term holder supply chain versus the ETF supply chain. The ETF supply chain is here in green. So yes, long-term it's great that the ETFs are buying, but it really doesn't move the needle compared to what the long-term holders are doing. The long-term holders decide to sell, then the ETFs won't be able to pick up the slack. Besides the long-term holders hopefully stopping their selling spree, I also want to see money flowing into the market again. We have looked at the stablecoin dominance, or as in how much is the market currently risk off, but there's also the stablecoin market cap, right? How many stablecoins get minted or burned. They get minted whenever somebody deposits fiat currency to, say, a centralized exchange, and the centralized exchange sends this over to a custodian. The custodian then holds the funds and issues the stablecoin. The burning happens the exact other way around, right? When people withdraw from the crypto ecosystem to traditional finance. And unfortunately, in the last 1.5 months, we haven't seen any expansion in the stablecoin market cap anymore. And if we don't see that expansion, there's always the risk of a potential implosion within the market, right? This was Terra Luna that then led to a contraction of the crypto ecosystem, which also led, of course, to prices declining. In October of 2023, we saw the turnaround, and we tend to only see sideways trading movements for roughly 2.5 months or so. So if we don't see any stablecoin expansion until end of the year, this would be very, very bearish. The last few days were bullish. We haven't yet hit a new all-time high. So I continue watching this very closely, as I'm also going to continue to watch the long-term holder movements very, very closely. If those two metrics do not improve, then there is a good chance that this is actually the scenario going forward. Bitcoin will do better than Ethereum, but both are likely going to go down measured in US dollars. If you got some value out of this video, feel free to give this a like. It helps the channel grow. Feel free to also subscribe. I publish videos regularly. Feel free to also check out the premium membership. This is where I share what trades I do, how I hedge myself in this market, how we're actually making money in this market right now. See you next time on YouTube, or see you on premium. Cheers.